Hi, hello.
Morning, Michael.
I'll just give it another minute or so. I'm going to try, I'm just looking at my screen, I'm going to try and share my screen somehow here so that I could, yeah, that'll be fantastic. I'll try and do that afterwards. Okay, I'm going to try and, yeah, that's cool, Monaco. Right. Okay, so I'm going to just talk about three things that have come to my mind in the past week, and I'm hoping that this will be helpful. And this is kind of more fun if people kind of when they want to ask a question. Otherwise, just me yapping for like half an hour, and that's not a lot of fun. But anyway, so I'll kind of put it out there, and then we'll just take it as it goes. So the thing that I believe is quite important is that you know your own investment strategy. Now, the advantage of you being crystal clear with your investment strategy is that you don't have ambiguity, you don't have moments of doubt. Is this a good time to buy? Should I sell? Like you're trying to remove that from the process, because if you're buying and selling at the same point, either stock at just different time frames, that's not a good investment strategy. You don't want to put yourself in a position where you kind of round tripping, or the stock goes up and you kind of, yeah, it's going okay, and then it comes back down, and what shall I do? So for myself, I've tried my best to formulate it in a way that without any heroics, I can see that the business, I have tried to some kind of rough gauge of what I believe the business is going to grow at. And I'm always trying to be conservative, because the thing that kills you in the market is when share prices are moving really quickly, either up or down. In those periods, we get ourselves confused into believing stuff that is not actually taking place. A good example of that is when markets are crashing, there's a lot of doom and gloom. And when markets are all going to the moon, everyone is so excited. And we believe things that are nonsense. And I hope that by having a very conservative strategy, that I'm removing that. In fact, with the passage of time, I find myself becoming more and more of a recluse, and just not even like discussing anything with anyone about like what stock I'm going to buy or whatever, because I just find that causes so much problems for me, that I'm just like, okay, often cases I will read what people say in my comments. I put out the March article on Friday. I kind of wanted to see, like, this looks really good. Did I make a mistake? Is there something obvious that I made a mistake? And that's kind of an advantage of being quite public about what stocks you are buying and selling. But I have tried to avoid like other things, other comments on other people's articles and stuff like that, or even on like Twitter and stuff like that. So I'm just trying to really have a very clear strategy that if I'm quite conservative with my growth expectations, and this builds on what we discussed last week. And last week, I was saying that a really good investment strategy is when you know that the stock looks like dead money for 6 months. You look at the guidance, because a lot of these companies now, it's the end of the year for them. They're reporting this week and next week. So all the analysis that people have, all the visibility people kind of have, is what happened until December. So companies come out, so they give you the new year lookout. But right now, there's a lot of ambiguity in the market. People are still working with the guidance from Q3, so there's limited visibility. And if you see that it doesn't look particularly exciting, the guidance for this quarter or next, but after that, like starting Q2, in the summer, just naturally the comparables start to improve because there was a deceleration in revenues coming into the second half of 2023. So naturally it becomes a lower hurdle. If the stock looks like dead money for 6 months, that means expectations are quite low. And that means that you can do reasonably well without even, without any heroics. And that's what you want. You want to try as much as possible to control your process and control what you like, so that the business can be reaccelerating its revenue growth rates. And when in 6 months, when you buy a position now, and in 6 months' time, it's, let's say, pretend for the sake of our discussion, it's 10% higher the share price. At that time, the business's prospects look better because this is just natural reacceleration. And when they give you the outlook in the summer, all of a sudden the stock is getting a bit more juice behind it, a bit more steam, momentum traders, whatever. And then it kind of just grows a little bit. So for me, if a stock does 15% in a year, I'm really quite satisfied with that. Obviously, you're going to have stocks that don't do well, right? I'm cognizant of that. But these small differences at the start, getting the timing right of when you get involved with the stock makes so much difference. And it's so, it's so underrated. Like with the PayPal stock, like it hasn't gone anywhere. I admit, like the stock hasn't gone anywhere since I've recommended it. But in my mind, I'm just thinking, okay, if I get, let's say, 5% between now and, let's say, the next quarter, and then as things start to improve towards the summer, that stock gets a bit more jazz in it, then I'm up, let's say, 15% for the year, and I'm like, whoa, tap myself. And this is a type of investment that I really like, where expectations are quite low. And I feel in my portfolio that I am trying hard to move away from just, these kind of high flyers. There's a lot of this jazz right now in the market. I don't know if, depending on how close you follow the market, you'll see there's a lot of these kind of AI stocks that are making a comeback again. It's like there's a lot of excitement in the market. And I'm always quite cautious, when there's a lot of excitement. And I have learned that the most important thing in your portfolio is that you try to have diversification, because nobody can predict the future. Nobody can predict which sectors of the market are going to have favor with investors in 6 months' time. Nobody can predict. That's just absolute nonsense. But if you have some diversification, some things will be working and other things will not. And that's okay, because the things that are working, you keep them a little bit, that's fine. And the things that are not working, you don't need to kind of get all caught up in it. Provided the stock still does, let's say, 5-10% return, that's pretty much okay. You want some different sensitivities to interest rates, so not all like in the meme stock, the high beta type of stuff. Okay, I had some notes myself. I just kind of want to make sure that I'm covering all the bases. Just bear with me a second, please. As well. So if, for example, when I come to invest, I'm trying to remove the commitment from myself, and I'm not very good at this yet, but I'm working hard on this to get rid of my losing stocks, and move into those, let those winners run a bit more. And I'm not very good at this right now, but this is something that I'm working for 2024, is to be quicker to recognize, this whole energy transformation hasn't worked out for me. I had this belief, everyone's going to be on this energy. Okay, it didn't work out. It doesn't matter, irrespective of my passion. The fact is the fact. But I'm being trying this year to be much quicker to say, okay, I had this vision of where the company could go, and it's not working out, and I can see that it's not working out. And this is something that I'm trying to work. But the advantage that gives you of recognizing your mistake slightly earlier is that you can sell that position, and it removes the biases that you have towards the stock. We're humans, unless you just an algo, like we kind of fall in love with certain ideas, and by exiting that position, it just clears up the mind and allows you to refocus with that fresh capital, what to think about. So I know it's a bit of a waffle, but I hope to explain myself what I'm thinking about, what I'm working towards in 2024, and I'm trying to explain how I'm trying to invest in terms of being conservative, but also not trying to kind of go and say, for example, hypothetically, AMD is reporting tonight, and everyone's like, oh, AMD is going to do well. It's going to be like the next NVIDIA. It probably will be. It might be. But it's difficult to have like a tiny bit more edge than everyone else, It's exciting when you buy a stock, hypothetically, like AMD back in the summer, when people's expectations are kind of still unsure and uncertainty. That's kind of more interesting, because when you kind of get involved in the stock there, it adds straight away with a margin of safety, so that when you go into earnings, it's kind of okay. If stock goes well, everyone's singing and dancing, and that's fine, because you've already built your margin of safety. And that's really important, because what you're trying your hardest, and like this is really, really difficult, but what you're trying your hardest to do is to invest as if you have already attained your ultimate wealth. Let's pretend that you're going to be a multimillionaire or a billionaire or whatever. You already have all the money you're going to make. That's it. You already got that. And your job is to preserve that buying power. If you think in those measures, rather than I'm trying to become a multimillionaire. So if you think in those measures of, I've already got the sum of money that I'm going to have, and have a bit more responsibility and being a bit more humble about how you deploy capital, I think that is something that, if you take nothing else from me, take that, think about that in that measure. Just invert the situation of not how much money I can make, what I'm going to lose. I think that is something that, if you take nothing else, I'll hopefully take that. Do you guys want to ask any questions at this point? I've got a few more topics, but if you guys wanted to ask any questions about anything that I said.
So I don't want to ask question. I just want to endorse what you said, because that was one of the biggest, I believe, groundbreaking moments in my investing last year. And I was opposite to your point of view, just to be perfectly clear. So for me, investing was an ego game. So finding multi-baggers, quick returns, but it came with lots, I would say, of nerves and strange stuff. And theoretically, not that much happened, but even thinking about stocks, not in terms of how much you can gain, but how safe they are, which in fact are often the same, just the two sides of the same coin. But it makes me more relaxed. It makes me make better decisions, and the outcomes are better. So I believe, Michael, that once you said that for you, chess is the ego game and investing is only for preserving the wealth, it works. So even if someone here believes it's counterintuitive for them, I would recommend to at least time. If someone does not agree, he can withdraw from it about a month or so in the game, but it doesn't hurt to try, and it can only make you better.
The problem is as well, is a lot of the media, right? The media loves, and not only like CNBC, but journalists writing books love to talk about those those abnormalities, which are like, Netflix, Tesla, whatever, they love, or if only you would invest in this amount, in that amount. It's like, those people have no skin in the game. They've never been in the game. They're like writing, but they're not in the game. When you're in the game, it's totally different. Even with something like, I said this to somebody the other day, I think it was last week on the call here. I can't remember, I think it was last week or the week before. And I was like, man, Tesla since 2020 was up like something like 400%. And they were like, oh my God, but it's down now like 10%. And I'm like, but when they write the book about Tesla, this down 10% is a bleep in the radar, but it causes so much pain. You look at that share price and it's back to where it was 6 months ago, and the person's all cut up. And I'm like, okay, but that's why you need to be crystal clear with what you're trying to do. Crystal clear. Because you want to know at this point in the game, like, for example, with Tesla, like, I don't own Tesla, I don't care about Tesla, but I'm just saying, at this point in the game, you have a vision, okay? I think that X amount of profits are coming. So what you're trying to do is you're trying to have a view of where it will be in 12 months, and you're always mindful of what the new investor coming to your stock today, right now, what are they going to see over the next 6 months? That needs to be like your game the whole time. Because it's easy in hindsight to say, oh, multi-compound, multi-bag, multi-whatever. But that's like, that it's easy to say in hindsight, okay? It's very easy to say, oh, I bought Tesla, I don't know, $10 a share, a pre-split, whatever, BS. But man, like, that doesn't matter. Who cares what price you bought? It only matters, really, really matters, is whether your capital is rightly preserved today, right now. If you really believe, now, I understand, I fully understand what I'm saying. It contradicts to what I said a couple of minutes ago, where I was saying that it builds your margin safety. But what I'm talking about is the difference where a person buys several years ago and a person buys 2 quarters ago. It's quite different, that, right? Because as an investor, you're trying to leverage the time, okay? That's really what you're trying to do. You're trying to deploy capital, and you need to, the timing is what matters, because if you buy a stock and you held it for 10 years and up 100%, like, okay, yeah, it's up 100%, that's great, but the time, you need to leverage the time. Well, it's always a game of time here. Okay, I will just press on, if you don't mind. And I'm going to hope, because Tomas recommended I do this, I'm going to try to share my screen, and I'm going to mess this up because I'm a genius. Let me just see. Can I share? 1 second. Just a second. Not very technical this here. That hasn't worked. Sorry. I do apologize. Okay. Can you see as a chart? Can you see a little share price for Sentinel-1?
I have that.
Okay, cool. Okay, so basically, someone asked me about stop losses, and stop losses are really difficult because when you're trying to invest in a company with a market cap of, let's say, less than 50 billion, and 50 billion nowadays isn't even that big, but anyway, it can have dramatic swings, like it can really swing around. So when I invest, the way that I try and do my stop loss, and I'm not very good at this, but I'm working my ass off on this, my is that 1 year time horizon. I'm trying to nail it on that 1 year. If the investment thesis is working out, great, then that's okay. But if it's not working out, I need to be more brutal, and that's what I'm going to work on this year. But in short period of time, something like Sentinel-1, it just swings like mad. Now, I've highlighted this stock as a stock that is, if you look at it, it seems to be working out, so it's kind of an easier one. But I'm going to highlight a different one, This is Giga Cloud Technologies, and on any given day, that stock is up or down 20%. Like it just swings like mad. Now, I'm not like counting my chickens yet, it hasn't, like, we don't know yet, but I've only held this stock, I think, 5 weeks, I think. 5 weeks. It's like a month and change. It's not a long time. And if it's kind of, if I'm up or down 20%, like in a day, that's really difficult. Doesn't really tell you much. But a business like this, if it's doing well and they're growing and they're growing profitably, just give it a little space, let it have a bit of wiggle room. So if I believe that I have some doubts about a certain stock, if I'm like, I'm not really sure about this, nobody is obligating me to take that position. I can always just come out of that position, or I can always like not invest in it. There's so much stuff in the market, and I'm finding stuff like, I would say like once every 2 months I'm finding a new stock. Sometimes obviously there's more things happening, sometimes there's less things happening, but for all intents and purposes, I have enough hard work in myself to find something. So I don't like to put stop losses because I don't want to lose all my hard work. Obviously, something like Albemarle, if I had a stop loss, it would have saved me a lot of pain, man, a lot of pain. Uranium Energy Corp is another stock. This would have like so much pain. And in hindsight, like I've done okay now with Uranium Energy Corp, but was it worth the pain? I don't think it was. I don't think it was worth the pain. So, but even having had that experience of things not working out, I feel that, I can speak with conviction and say, I don't want to have the stop loss. Just to summarize this bit here, if I don't feel that the business is going to be substantially more profitable next year, nobody's forcing you to take, or myself or whatever, to take that position. No one's forcing it. Just keep it in cash. Like a few months later, something else will come up. And I know that for certain, particularly in these periods where it's so volatile because it's earnings season and everyone is like jumping out of their skin, things just are coming up. So invest as if you have all the money you're going to have in the rest of your life. And and try and preserve that. Work hard to preserve that. Does anyone want to kind of discuss anything about stop losses, some experiences? Either maybe you use stop losses and you want to kind of say what you think about that.
I don't use stop losses. Oh, George, you started talking.
Okay, I'm like you. I'm like Michael. I never used them, but it's really hurt me because I've had such conviction in a stock. It went down and down and down. So there's certainly a time for it that could have saved me quite a bit. But I'm in your camp. I believe, I don't want it to trip just when it goes down and then it hits a stop loss and then goes back up. I wouldn't like that to happen.
That that is why they exist, obviously. But I also feel that, and this is what I was trying to explain at the start, it's like, don't fall in love with a stock. Let's hypothetically say, you got a 10 stock portfolio, pretend, okay, it's a bit concentrated, but okay, 10 stock portfolio, and something is dying and you're just collapsing. The best way to really drive your portfolio forward is not to keep buying the one that's dying. Is to say, okay, I'm a very like all human beings, I'm proud, I'm hardworking, this is my effort, this is a reflection of who I am, this is my portfolio, this is my intellectual property. But if something doesn't work out, despite the work that I put into it, it wasn't meant to be, man. Like, it wasn't meant to be. Like some things are not going to work. Whether it's Buffett with IBM, or I'm not the best Buffettologist, but plenty of other investors like that have done pretty well for themselves have massive failure rate. Look at David Ahorn. Okay, like I'm not picking on the dude, but I'm just saying that in this game, you are going to have mistakes. You need a process in place on day one with how you're going to deal with that failure. And you need to leave some room to be able to improve on that failure. But those failures are going to come. Like in life, it just hits you at the worst possible time, man. Like the worst possible time, it hits you. But you need, like, say, I don't have 10 stocks, I got 15, but so that straight away kind of removes a little bit there. But try not to kind of become too overwhelmed with chasing something down to prove anything to anyone. Okay. Does anyone else want to talk about something about stop losses? We've got another topic if you guys, go ahead. Yeah, please do.
I hate stop losses. In fact, I'm implementing the opposite, so stop gains, but that's something else. No, but for me, stop loss is just an easy excuse not to learn about the stock, about the situation, what can move the price up or down. Because what I try to do is just to know, Michael, again, your advice, 3 bullet points why you purchase the stock. What's your investment thesis? And I taught myself and really made some good money on knowing, okay, if I know the stock well, I think why it falls down or goes up, whether it's, in one day, no one knows what happens in the market, but there is some sort of trend. So is this trend my friend or not? Are the people seeing something I'm not seeing, or am I the one seeing something they are not seeing? And long term, I believe it's beneficial. And I even do not want to implement stop losses. I believe that stop losses probably would have saved me some money losses, but these were all learnings. Whenever I lost money, there was some learning point, like, okay, when I invested in this company, I didn't consider lithium prices in case of Albemarle, on some other stuff there. So it's more about knowing your investment. And when you know your investment, you do not need that much stop losses. That's my opinion.
So can
Unless you are gambling, because there are some stocks I know I'm gambling, like biotechs, where it's a very binary outcome of clinical trials. But I know the rules of the game, and then I'm happy with that.
Yeah, that's really, really important. That, as I said before, it's knowing your strategy, right? But just out of interest, like when you put like a cap on the gain, is it like 20%? How do you kind of figure that out?
In fact, I'm doing something else, which has proven rather good in case of portfolio. I have equally weighted, almost equally weighted, because it's an exercise in force precision. And when I see that the position tends to be too big in my portfolio, then I trim it. It's better than finding out whether it's 10 or 20%. And the second thing is that I try to use sort of technical indicators like MACD or other stuff, which I find useful on average. So if I had a portfolio of 5 stocks, I wouldn't use technical analysis. When I have a portfolio of 20 something, I believe it's good then. So when I see that something has gone up by 30 or 40%, I'm checking the trend line and so on. So,
you mentioned before that sometimes you said, oh, if I know the company well, and, like for every case is like the opposite case. Like that's how it is in business. Business is like an ecosystem. Sometimes things are kind of, oh, it works in that case, but it doesn't work in that case. Like salmons normally go up the river, but most of the fishes go down the river, right? So things in business sometimes is abnormalities. But, I look at something, let's say, like Constellation Software, and people don't. I know a guy that has been investing in constellation software for like many years. He's one like the brightest people I know in investing. Like, and you know, he'll tell me despite him being a hedge fund dude, and despite him being an analyst and working at one of the major banks, he hasn't got a clue what Constellation Software does. And he's been invested as a fundamental guy, and he's like, I don't need a lot of other stock. This stock for me is fine. I'm quite happy to just stay with it. And it's a stock that doesn't really give investors that much knowledge of what's working on inside. And it's difficult to really get a grasp. You kind of buy into Mark Leonard's vision, and then you stay for the ride, or you don't. If you don't know Constellation, maybe like Berkshire Hathaway or whatever, like you don't really know what really is inside Berkshire Hathaway. Really, no one has really any clue. But these kind of things, and then you have other businesses where management is consistently spewing out a narrative to give you the illusion that you know what the business does, but in reality, they're just spinning a web. And it's difficult to be able to distinguish whether a person ultimately knows the business well, because sometimes we think we know the business, but we don't really know the business. Like, and I'm not really asking a question, kind of just putting it out there, kind of, you know, say, just kind of.
But for me, because I've had these considerations many times, and that's why I love earning calls, because for me, financial execution is what distinguishes sci-fi storytellers from visionary CEOs. So if the vision is good, then financials should follow, and not only the revenue, because I believe that majority of Wall Street at least loved top line growth for about a decade. Suddenly there is this path to profitability. For me, profitability, or at least path to profitability, should have always been there. So if I saw someone who was a visionary leader and saying only about the top line and nothing about the bottom line, I hated it. And sometimes I told, you need to know the business well. There are few businesses that I know really well, but there are some that I do not know that much, but still the financials work out. So still I can see that bottom line is growing, fundamental indicators are nice. And again, it's important what we said before about the diversification, the number of stocks you hold, because if you have rather equally weighted portfolio, which is rather diversified, then it should not be a situation when everything falls down apart from a global crisis, but then it's a different story.
And kind of building on that, I feel like, you know, value investors often say, oh, you know, this stock is cheap, therefore it's undervalued. But, you know, more often than not, the market gets things right. And this is really difficult because, like what Luke said in the comment, was it this week? Yeah, it was this week. I think it was over the weekend. It's like, oh, when there's like a tech innovation, and a lot of stocks get priced at a premium, but it's really difficult to know which one has actually a really compelling business model and which one is just going to fade away. And that's why investing is so difficult. But, you know, certain stocks have just always been overvalued. Look at NVIDIA. It's not that a stock that I own, but man, apart from a few bleeps here and there where you know, they look like tiny little bleeps at the time. But for example, when there was the crypto crisis, I think the first one time around, I think it was 2017 or so, man, that was a really difficult time to kind of get involved with the stock. So for the majority of the time, it's, you know, the market does get things right, but it's really difficult in the day-to-day operation to distinguish. You know, that's really where the work comes in, I suppose. Okay, I think I've waffled on quite a bit today. Would anyone like to kind of ask any more questions or any more comments?
Michael, I want to say good job on what you're doing. I mean, I really appreciate all the work you do. It shows, and I wanted to thank you for that. And also, a question on I noticed that back in 23, you actually saw SMSC, and you I because I saw it went up 500%, you know, and you picked it back then. You picked it as a buy. So you know what you're doing. Keep it up.
Okay, man, that's really cool. Thank you. Oh, listen, you know, as you know, I don't own the stock, so it's for all my genius. I didn't do anything with it, so I don't take any credit for it whatsoever. You know, that's what I was trying to kind of explain. You know, in hindsight, it's really easy. It's really easy, but I'm seriously determined that this year, like, take everyone with me. We're all gonna make some money, and I've got some faults that I'm working really hard on improving, but I'm really hoping that I can this year, man, I can help people. I can help people, explain to people, have this kind of diversified portfolio. Don't fall in love with your stocks. I'm really grateful, George. You know, like you and Tomas, like you guys have always been here for me. I'm really grateful. You guys giving me tons of helpful feedback, both of you. And yeah, I'm really grateful for like everything. And now I feel like I've got to take that on my own and kind of, you know, it's payback time. So I'm grateful for you guys, other people on the call as well. Yeah, this year we're gonna make it work for everybody. Cool. I'll wrap it up there. Thank you so much, everyone. Thank you. See you soon.
Thank you, Michael.
Thank you so much. Bye.